Welcome back, folks. Let me get this going. Whoa, what do you know? What do you know? I'm looking at the profit section right now. I see some people that bought things on Friday, met with 416. Where's my gains? There it is. Met with the 416. Brian with the 312. Now that I updated the emotes, they're not on the favorites. Ecto with the 7%er. Lucky 7. Venki the killer with March monthlies all over the place. Plus 1200. Spoon with a fat 15. Chris with 11. Those are some numbers, gentlemen. Nice gains. Very nice gains. I'm sure there's more to come. Let's talk a little bit again about where we're at. So coming from last week, all of the volatility in the bond market, yields rising, and coming into Friday off of a very sort of tumultuous sell event on Thursday, especially on the tech side, right? We stabilized on Friday, and to us, you got to remember we didn't specifically say it in the same notion, but we buy on fear, and we buy on the pullback into support. But as we understood it, the yields increasing was a good thing for the equity market. It's a good thing because of reinflation, right? So you got to remember that we've been talking about reinflation. The reason why we've been speculating on this move and been a part of it for so long is because of what just happened. So we think it's actually a good thing for the equity market. It's a risk-on sort of mentality to be selling off. Look at bonds continuing to sell off, right? It's very important to understand that money wants to come here. They want to be risk-on. So again, if you're not a part of it, then you're just not a part of it. I mean, it's like the meme of, well, then I guess you're short. If you're not in it, I guess you're short, because that's the reality. So those of you that did enter on the pullback here, again, this is not, you can't be like, oh, we're crashing, and then go stonks only go up. You can't change your mind every single day. So again, those of you that have stayed composed, just have stuck to price, you're the one being rewarded for it. And you're going to continue to be rewarded for it, because what is the market signaling? It just keeps signaling the same thing. Whether it actually makes the move or not, it continues to signal the same thing, that we're going all-time high and not stopping. And I think something important today that's very different from last week before the yield event is that it was the entire equity market, and we're seeing it across all asset classes. And we talk about that sort of that holy trinity of having equities up, commodities, which we include Bitcoin in there, and the dollar being down. So those being up, dollar being down, as sort of a part of this. Over here, we saw tech also increasing, which is a very important picture, and we're only as strong as the weakest link, finishing right at the trend line here. What's going to happen? What's going to happen tomorrow? What do you think is really going to happen here tomorrow? Do you think that price is going to be within the trend line, or it's just going to get rejected and we're going to come back down? I mean, yes, you can say that we're going to get a take profit into here, but this week even, and even tomorrow, yes, in most cases after a big buy day, you retrace. But in this case, it certainly does not feel that way in terms of where price is. And from a macro standpoint, where the market is, here's the Hang Seng. You know what tech just did today? It probably just gapped the Hang Seng up a few hundred points at the least. So it's one of those. It's going to be one of those sort of situations where the whole bond market just got stabilized. The yields are stabilized. If you look at sort of what happened during today, it's a continuation from Friday of stabilization that no one really feels. There was pain in the moment, but again, there was an understanding the whole time of what the point of it was anyway. The only thing that changes up some of the tone here of going further into the week, again, is that on Thursday we have an OPEC meeting, which is important for the commodity side in terms of super cycle, whatever the hell it's going to be, but that added value to some of the larger tickers and small caps of energy. and then also Powell speaking, and he's going to have to speak on the yields acting up in here. At this point, they've stabilized so much that I don't think it would have been different if today there was some continued rise. Maybe it was a little volatility, but it's basically dropped off. Spot VIX has dropped off. So again, what are we doing? We're just continue. Listen, you bought on Friday, you bought on this fear, then are you no longer going to be a buyer because of where price is now? I mean, it's very hard to convince yourself that, okay, that was good. I got my 1 day. With that being said, individual position wise, let's talk about some individual positions here, and I'm going to be very careful about talking some of these because we don't always talk about the percent gain on the option side, and we talk about 100%, and we strive to get 100% on a trade. I'm going to talk a little bit about some of the percents on some of these trades and why it's so critical to take them when you can, because it really transforms everything that you do.
Market data
apps here. We talked about you have to push this over the weekend. You traded just about any calls over here, you're getting at least 250% from Friday. At least 250% from Friday into where price is right now. At least. If you got a little bit more risky, you're getting into the 300s. Now, there's about 10 or so other trades that look like this. We'll look at just a few of them. There's about 10 or so other positions that are like this where you get at least 200% on some of them, and then at least getting 100% where you, no matter what you did, you're at least getting 100% there. Go look at them. We've talked about them. A lot of you are within these trades. This again, you're making a trade that at the end of the day, you're buying on risk, but that risk is paying you. It's literally, if you don't take that risk, you're not getting paid. Because if you buy these at open today, almost anywhere, you're not getting paid because you're no longer taking any risk. Because there is no risk to be buying when everyone else is buying, right? It's really become such a big thing now to be putting on these trades over the weekend, and I know I've really started to hound on it a little bit more that by buying into the weekend, whether you're able to capture it from open, which again, we try to strive to buy those things from open and have the whole day ahead of us, or if you buy it closed with no price data until the open, that risk over the weekend in buying on pullbacks and dips is just, it's very powerful, and it's going to pay off more times than not if you're on the right side of the market, right? Chinese tickers. Go look at the options. Go look at the options for just about any Chinese tickers, and you put the trade on over the weekend. We put Chinese companies on every single weekend. Been right a lot more times than we're wrong, and guess what? When you're wrong, what are you losing? You're losing at most 10% on when you get stopped out. At most 10%, and almost always break even based on the entry. On the other side, the reward side, 100%. 100%. Now you make 10 trades, and that fills up all of your cash, and the average comes out to like 75%. You're doing pretty good for one fucking day. Not even 1 day, a weekend, right? Not even trading day. Just all of the Friday trading day, if you're in the position from open, that was it. You didn't have to do anything. And that was in 1 day that you made your gain. And you didn't have to do a thing. All you had to do was look at your charts, follow the flows, and make a higher probability trade than not. And by not putting on too much risk, whether it's a 50-50 trade, a lotto trade into earnings, whatever the hell it is, and you just traded what you're supposed to, it's charts that we're looking at. What about pot stocks? You got paid on pot stocks. You got paid. If you bought them at open today, you got paid on them. You got paid. The cars chart, I'm not really going to look at. Again, this was from open. It's not very liquid, so basically it's just us in there anyway. So keep that in mind. In terms of other tickers, we had meme stocks that were playing the game today. Again, to be involved with this, very short trades, fun little day trades. You could take advantage of it though. VLDR, I talked about with this level at 16. Very nice trade there. DraftKings was a must take trade from last week. Again, over 100% trade for doing nothing. You literally didn't do anything because everyone else did the same thing. Instead, though, what did you do? You just bought a little bit earlier. You bought a little bit earlier because what was the motto coming to this year? We're going to trust price and not be a pussy. Not taking the trade is just, you know you're going to take the trade later. You know you're going to take the trade later, just like you know if you're going to take profit later or not. And so you should take profit before the price goes down. If you know you're going to get out of that trade, if tomorrow you know you'd get out of the trade, then just get out of it immediately. Take the gain now. Get back in. It's okay. Until you get to the point where you can push trades, get in and out of trades, right? X. Every single Friday we've taken this trade. It's become probably the most consistent and easy trade to spot. Even when we had this bearish move here, we knew when to wait for it. We weren't buying through all this. We knew when to wait for it because we wait for consolidations in the break. Again, this trade, you're not trading for this day here. You're not trading for one day here. You could take some gains off here on short terms, but you're pushing this trade for a long term. And again, the only way to make this trade is to keep taking the trade every time it opens itself up and look to push it further. Not always is it going to be there. It's not always going to be there. It doesn't always pay. DFEN is a good example of one. All of the aerospace and defense, now this specific leveraged ETF, of course, is a little bit lower volume. I think it was you, Venki, that mentioned it a little earlier. Like, what about the fact that it's barely moved here? It's up 10% here. Contracts are up 20%. It's because of this big level here. So you're taking this trade for the points that come above here. Because as soon as it breaks this, as soon as it breaks here, then the points come on because you broke the supply. Until you break it, the speculation is that you're not going to break it. So until it happens, it hasn't happened. And so for the acceleration to come through here, it needs to break. We don't take this trade, whether you took it down here. And now, again, there's a difference between taking it down here and taking it here. We don't take this trade for this swing. We take it for this one that has unlimited potential. What about all those other charts? GE, aerospace and defense, 4.5%. Everyone's favorite RTX broke the level today, which is again, these are all in a similar spot, but it is above its level. These charts, SPR, right? This kind of sector-wide trading. Whoops, I don't know what that is. Sector-wide trading. This is up over 8% today. Again, was there any doubt from here? I'm sure some of you still have the same contracts here, but was there any doubt? No. You got to stick with those trades. Keep pushing those trades. It's not a trade if you're. I mean, I guess it's a trade, but you have to make something out of it. You have to make something out of it. Otherwise, what's the fucking point? SunPower from Friday. What about these trades? Has anything changed? No. Am I in support? Yes. Take the trade. Take the trade. Take the trade. Here you are. You get paid today. Retail stores across the board. Discovery. What about Discovery? DISCA. Viacom. These charts on trends. It breaks the trend line. What are you doing at open? What were you seriously doing at open? What were you doing over here that you couldn't buy it? You guys have a good excuse of why you can't enter this trade on the trend line. Then fine. Otherwise, you're just not paying attention. You're just not paying attention, and you don't really care about making money. Now, some of you might have good excuses. That's fine. But I would imagine that those of you that didn't enter the trade, you don't have any excuse other than, well, I don't know. I don't know what I was doing, man. You don't know. And that's okay sometimes, but you got to learn from it because you miss too many and you're going to become an old man and be broke. You're going to be wondering why your money is still in your brokerage account or why you've lost all the money in your brokerage account and it's not in your bank account and you haven't spent it, right? You still haven't spent your money because the money you keep making or losing just stays in your brokerage account and just keeps churning and churning in a loop. It's like a carousel, your fucking brokerage account. It never enters your bank account. Your wife never sees the money. You single guys never get a girlfriend because you never have the money at home. You're not willing to spend money. You got to make the trades and take the money home. If you don't realize it, it's not real. The people think the stock market and the whole equity markets are fucking fake to begin with and not tied to the economy because no one ever realizes their gains. They don't ever realize them. They just keep putting them back in, never take any out. You got to start realizing them. And the only way you can realize them is by taking the fucking trade. Zoom. What are we doing on Zoom? Who took profit on Zoom? Have you followed your rules by taking Zoom, JJR? Where are you? Oh, he's on the recording. JJR, I know you're watching on the recording. You probably just woke up. You just woke up. You're in Europe. You're probably already having your first glass of coffee. The kids are fucking whining. Your wife's nagging. And you took profit on Zoom because you didn't want to what? You didn't want to have to worry about it over the night because you were only up 10%. You didn't want to worry about it. And you guys are laughing in the chat. You guys are laughing in the chat and just got baited because JGR's making money. How many of you made money on Zoom today? How many of you pushed your Zoom trade? I bet very few of you. You might want to delete your messages before, they hurt you. I bet that's some chuckles that are a little nervous chuckles. Yeah. I know you guys aren't. I'm just joking. But again, these are things that we talk about, though. Was there any reason to exit that trade? Well, earnings, Don. What about the earnings? What about the earnings? What about the earnings? Tell me what about the earnings matters to you. What about the earnings matters? Did they have more fucking people on Zoom calls this month? This quarter? Do you care? Is Apple up because they sold more iPhones? They released a new they got a new iPhone 13. Everyone just finally got the iPhone 12s. They're releasing a 13. Is that why the price is going up? Is that why? Okay, the other big part of today. The intermediaries on EVs and then EVs. Plug, for instance, where it is here. These trades are very difficult, and I sort of made a comment in the bullshit channel. These charts are difficult. They do not have clear entries. There's nothing clear about them. All these are flows. I want you to think about some things here in terms of flows. We have a higher inflow. I want you guys to go Google ETF inflows at some point after we get off the call right now. And you're going to see the highest inflow of ETFs into ETFs and into the market. I'm using ETFs because I'm trying to go into the ARK sort of angle here in a second. The highest inflow ever in February. Ever in any year. In February. February is a short month, by the way. The most money ever flowing. The most options volume ever, right? So on charts like these, what do? We have to buy on the pullback. We have to just buy it. We can't be exact. So these type of charts, we're just going to fucking buy them. We're just going to buy them. And I see that I'm losing internet again. Not sure what's going on there, guys. Not sure what's going on there. But so ARK, for instance, right? We talked about shorting ARK here. We did specifically ARK-G. Specifically ARK-G. Oh, I don't know where the trend lines are, but obviously posted the chart over here. We shorted it. What are we doing over here? It's a mess. It's a mess. But what are we trying to do? We're trying to capture moves. We're trying to capture the flows. There's been a bit of an outflow here. Does that stop in future inflows? No. There's going to be inflows. So these type of charts, what we're going to do is we're not going to specifically. We are going to look for levels, like Tesla breaking this level in here. We talked about the tightening in here. It's right there. You have to call it. We are going to trade these for the flows. We're not going to trade them for anything else. We're not going to trade them for analyst rankings, fucking fundamentals. The technical part we use because it helps with our timing. But even that, we're not going to go full macro trend lines or anything like that because the flows, we need to capture it now or else later it's just too late. I don't want to be fucking buying it up here. If it's going to move and people are buying it and the flows are going to come, I don't want to be a buyer up here if I can be a buyer down here. So some of these, the risks are there and worth it. So this is going to come down to some portfolio management, whether you've got cash ready. These are still behind our other value trades. They're certainly behind in terms of tiers, but they are there in opportunities. And so you don't want to be caught off and saying, well, I love Tesla so much. So you know what? Screw all these other charts I'm making money on. I'm going to take profit and go enter this. That's not the way to look at it. You got to be just unbiased. And when it's there, the flows are there is what I'm saying. Just like the market itself, the flows are there. There's no reason to be doubting the market in terms of its long-term trend. There's times when we can short through the swings. Like these were great swing opportunities in tech. But these moves that are incoming, we need to understand are flow based, and we're going to have significant volume every month because think about it. Why do markets just keep going up? Why does the population of the planet keep going up? Why does the money supply keep going up? These type of things, it just keeps appreciating, right? Don't doubt it's like Elon's song, don't doubt the vibe. Don't doubt your vibe, right? The reality is there's no reason to doubt the fact that we're going to keep appreciating. It's just knowing the timing. Well, we have to take the timing when it's there. It's hard to buy up here. It's easy to be buying down here. It might seem difficult, but it's the only time there's actual opportunity. When you think of opportunity, the only time is when things get oversold, right? Things get oversold. No, that doesn't mean go take out your oversold indicators. No, but understanding it from a flows perspective and from a macro perspective, that when you look at those fucking numbers, we've had higher inflows. I even posted some of the numbers going into the weekend. When you have higher inflows and the price is going down, then there's nothing else you need to know. You're just, at that point, you don't know yourself. You've got no clue how things work, right? In terms of other individual trades, again, I want you to take a look at the buy watch list, the tickers we watch. Someone, I can't remember, I think it was Matt or somebody who made it was C-Trader, or was making the joke of, hey, I just woke up, what can I buy? Just throw a dart. You could have thrown a dart and made money on anything. So I don't want to take away from the fact that everything was up. Everything was up. There's nothing. You could have bought anything on Friday. So I know we chase perfection. We'll never capture perfection, but we chase it. You could have bought anything on Friday. You could have bought anything. So again, it's just knowing from a macro standpoint and from an equities standpoint. To trade equities, you need to know how all the other markets work. We try to, through opportunity cost, get involved in the best trade. And we did get involved in some of the best trades. We absolutely did. But it doesn't take away from the fact that as long as you just bought something, that was better than doing nothing. And again, some of you that have continued to have a hard time doing this, you need to again realize these are your moments. These are your moments to actually make money and to do something. Other than that, you're fighting every day. You're just fighting every single day, which is fine. That's the grind. But that's a level of consistency that is harder than just buying these. These are easier. There's less difficulty here in this trade than there is to make consistent trades over an entire year. These few opportunities you get, you have to take them. Again, keep building upon it. Keep learning and building on it so that the next time you could take advantage, right? One of these times, guess what? One of these times when we buy it, the market will go down. But guess what? The last time that was the case, let me show you. The last time that was the case that you bought on one of those dips, hold on. Okay, is this it? Oh yeah, I think this is it. You guys heard of the financial crisis in 2008? Coming from 2007? Yeah, that would have been the time when you bought on something and it did fucking crash. That was 13 years ago. Some of you were, I don't know, we get some weird age discrepancies in this group, but, let's just be honest. That was quite some time ago. And no, this doesn't count because there was no, let's buy it back. You weren't doing the same thing up here. You weren't going, I guess if I buy this dip, it's going to be scary. No, don't even try to compare these fucking candles here to over here. You're out of your mind. So there is no historical context to doubt yourself over here. You're doubting yourself. You don't need to doubt the market. The price is price. There's more fucking inflows. If you tell me there's more money coming into the market than leaving it, well then that means price is going to go up, even if it says it's going down. So there you go. Ecto says I was in middle school. Brian says I was in elementary school. There you go. See? Whatever that fucking point was supposed to be. Okay. The other trades, again, DraftKings Pen were must-take trades. Again, these retail trades, very important to see these, understand them. Those of you that have not incorporated or have overly incorporated the retail trades, again, even if we're trying to make consistent trades, we need to take advantage of retail when we can. DraftKings and Penn, what are they going to do today if the market's up? They're going to fucking buy it. What did they do? They fucking bought it. And so by entering down here before Monday started today, all you need to ask yourself on Friday here, not where the price is or anything, you need to ask on Monday if the market's up, are they going to buy it? Yeah, fucking most likely. That's what they do. You have to take advantage of retail because you're not trying to beat them. If you're trying to beat the market, you're trying to beat the other traders. Well, beat the 1/5 that you can. The 1/5 of the volume in the market that you can beat, that you are smarter than, because you're here, you're trying to fucking get it together. The greasy finger mobile trader, retail traders, they're not using resources. They're reading bad information. They're trading on hype. They're trading on green days only, selling on red days. You're going to get one step ahead of them, which is to capture their move and sell to them. You can take profit on this and sell to them. It's fine. You don't need to push it further, but you need to take the 100% when it's given to you. Not taking it is just, you're doing even worse than they are. They at least are up unrealized, right? Again, I think everyone did pretty good. I saw the profit. Let me see. We have some more profit numbers come through. Let me see what do we got here. C Trader with $1,430. There you go. There you go. How did we do overall today? We probably made quite a bit. I don't mean just like today. I mean, over the week, this sets up a week, because if according to the plan we keep going, we were projecting pretty fucking high, pretty big numbers, right? So I mean, those are awesome numbers, guys. Definitely things that we should celebrate again, because again, that's buying on other people's fears, and that's trades that a lot of you would not have made before. A lot of you over here would have been memeing on Twitter. What happened last week? Exactly. If that was the answer to that question. Okay, sector-wide. I'm going to bring it through ETFs real quick, and we'll get out of here. I got a lot of charts to do tonight. XLE, energy. Energy was up over 2.5% today. Value keeps going. Energy, it's up over 0.5% in after hours right now. Energy continues to go. Important to understand that energy is a big part of value. This keeps going, value keeps going. Banks absolutely fucking massacred it today. Over 3% continues. Again, these are for every 1% you're getting significant points on options. Again, if you're not, you got an opportunity here. You weren't involved. You couldn't ever get in. You felt like you got an opportunity here. And again, by not taking the trade, you're continuing to ignore what's right in front of you in terms of price. I don't care what you think about anything, or what you think about banks, or what you care about energy. You got to take the trades that are in front of you. These continue. They continue. We're using these as big benchmarks in terms of our understanding of the current moves. It's important to take these trades when they're there, because again, it's going to run away from you, and the more it runs away from you, the less likely you are to make a trade, and the more likely you are to make a trade that goes against it, because you want to prove it wrong, because it's been proving you wrong, right? When someone proves you wrong and you're trying to argue against it, you try to do the other thing, usually that hurts you. You're trying to prove something when you don't need to. Accept you're wrong and make the trade. Make the trade. Just, again. Now, in terms of semiconductors, there's a lot of different things going on here. We had the AMKR position from Friday that did very well today. We talked about TSM and UMC being sort of the larger, not the larger, but the better looking trades. 2.5% today on TSM. It's in this trend line here, interacting with it, which sets up a nice day tomorrow. UMC, in terms of where it was, very similar idea, just pushing up over the weekend, held its value from the gap. Important to see that it held. And then when we look at the more volatile tickers, not doing as well, a little bit further behind, but still signaling that this has turned. It looks very much like tech, doesn't it? When you look at all the tech tickers, all this nonsense in here, the noise, a lot of volatility. Let me show you the Qs chart. The tech average in here, what are they all signaling? They're signaling they're gonna converge with the rest of the market to the upside. So there are trades that are getting set up to tomorrow that you could have gotten set up today if you weren't already very positioned in value. So these trades are offering points. This point move here it's about 4.25 now to the all-time. It's important to keep this in mind, because again, that's a lot of it's a lot of points. And what does that mean? That means that these other charts that we see that are already close to all-time high have a very big push coming from other charts, right? From other sectors. The big sort of black horse, dark horse. Why did I just say black? The big dark horse of the group is the fucking Dow, because when we talk about value, we've been talking about so much of small caps. And I mean, of course, we've been talking about energy and banks and stuff, but we've been talking about how Dow is kind of disgusting and not really, not the most appealing. The thing here is that this is value in large caps. This is the large cap value. What's going on right now? Everyone's trying to get a little bit of liquidity. If you want to trade value, you're running out of liquidity besides banks and energy on the big side. You need to go somewhere else. So what's going to do well? A lot of the Dow, those 30 Dow companies are going to do very well if we continue here. If we're pushing through all-time high. Look at the Dow last week. Through that volatility, look what it did on fucking Wednesday. This is a candle that does not exist on the Dow chart. This does not exist on the Dow chart. Look at this price action. And then look at this price action with volatility. This does not do well with volatility. Well, over here it did. Now it got reacted to the market because it's very tied to yields. This is adding, I want you to think about the other market. I want you to think about the other indices when we look at them. And think about the candles. Okay, think about the candle sizing, right? So like over here, these are small candles, right? Not much spread, not much volatility. And now look at the candles over here. Big, wide spreads, a lot of volatility, big price movement, a lot of flows. Same thing over here, right? Not much, First of all, these candles over here are about twice as large as they were before COVID, right? But think about the sizing of the size of the spreads and the price moves that we have currently. That's because we're pricing almost instantaneously. We're pricing a lot of volatility and a lot of price movement because of a lot of flows. Right now, our volumes are out of the fucking roof. Flows are out of the roof. Compare these candles sort of to, here's pre-COVID. Look at the price movement here, right? Very minimal price movement in an index. An index doesn't move that much. It's not supposed to. It trends. It's a big weight, right? Well, of course, this past year, we've really turned that on its head. We have big price movement every single day. If it's not moving 2%, then what's it doing, right? We think it's slow. I want you to think about all of that and now compare it to the Dow. And again, I'm using the DIA as the ETF because that's what we can trade, right? I want you to think about some of this price movement, why it doesn't look very good in here, because of how it's volatile, swinging back and forth, but it's not really doing anything, right? It's just sort of in the same spot. And compare this price movement now. It's very important to see this because when that starts to happen, that's opportunity. That's just like buying on high volatility. That's like buying on a dip. Anything what it is, whatever it is, those are the opportunities that we take. This chart is, when we talk about when everyone's taking the same trade, you don't make as much money, but you can make money. Here is a side of the value trade that not everyone's taking. Not everyone's taking it. Everyone's betting on value, sure, but not everyone's doing it through this angle. Guess what's going to happen when we run out of liquidity in small caps, which will happen. You'll get a point where you can't buy any more small caps, and you can't buy any more of those value charts. You can only buy fucking death boat so much. You can only buy the death boat so much. They're going to go to the big boys on the Dow. Dow 34,000 is going to happen, boys. The Dow 34,000 meme by April is going to happen, and I'm betting on it. You've seen all those charts I posted from the Dow. I'm betting on it. Posted on fucking Twitter last week. It's not even that it's a rotation. It's already happened, right? It's already been happening. It's just that now we've realized it. We've speculated on it, and now it happened. Those high yields are the fucking signal. Those are the signal that it's happened. Everything was betting on higher yields, and then it happens, and everyone got scared. What are they getting scared for? They were betting on it in the first place. What are they scared for higher yields for a hotter economy and reinflation? Are you out of your mind? No, what happened is that they went, holy shit, this is all happening at once, and we all need to sell our treasuries and go buy some fucking equities and stop being pussies and make some money because, again, it's here now. The flows are here and now. The volume is here and now. Everyone on options. The most options volume ever, every single month. February, most options volume ever. March is going to be the highest ever as well. You got to keep going with the flow. Otherwise, you're trying to go against the current, and you're going to get absolutely capsized. Just like over here at the bond market, not realizing how quickly that moment would happen. It stabilized, and now we're see you later. Don't sleep on the idea here. Again, this price movement gets violent, and we instantly price like we did today. When you look at the SPY, no reason to go into tech, but guess what? You got to get liquidity somewhere. You know what's really fucking easy to buy? Apple. Really easy to buy Apple. It's really easy to buy Apple. There's a lot of people in there. This thing was moving as if it was a small cap or something, and not the largest company in the world, because there's hundreds and hundreds of thousands of calls squeezing this price up. People aren't even buying shares. The institutions are. This is market makers. Does that look like people to you? Do you trade like that? Even when you bring it to the 5-minute, do you trade like this? Do you trade like this? No, it's just fucking market makers having to buy the underlying because of all you fucking people buying options. That's all this is. We look for this kind of price action. I watched the level 2 book the whole day, the entire day. And the whole time, there's just scheduled orders popping in, boop, 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 because it has to track to the underlying. Every time a new contract, there'd be like, I don't know, 50,000 contracts that are now in the money. Oh, gotta put the order in. Oh, 50,000 more, gotta put the order in, put the order in, put the order in. That's all it is, right? That's all it is. Don't sleep on even this idea. I mean, even myself, shorting through here, getting a great short, you have to be willing to now not immediately buy back and go alongside, but after it gains confidence, tightens, you have to be ready for that next move. So again, we're just talking equities in total. Yes, there's areas that are better than others, but it doesn't mean you can't be a part of anything. You can be a part of anything you grab and take something. So again, I would look through all these tickers. There's about 200 over 5%. There's 1,000 that are green from our list. It's important to realize, again, yeah, you could have thrown a dart. The tickers that were down, what were the tickers that were down? Volatility was down. The charts that we took profit on, like FSR, but even this had a great day, considering it had 32%. Nothing was down. Anything that was down was coming off of a big take profit day. Don't sleep this week. I'm gonna have a lot of charts coming out, probably tonight. I'm gonna be introducing some of the lower volume plays. Again, I'll asterisk it and put it in parentheses that it's a lower volume play that I'm trying to sort of axe the option chain. Again, you need to be aware of. I can already tell that DFEN chart, we're having some problems because we're all in there and none of us are trading. You got to be aware of some of these. If I know it doesn't seem like much, but if we're the only ones trading a chain, you got to realize that if we're the only ones there and none of us are actually selling something, then we're not gaining anything. We're just not gaining anything. So be aware that when I post charts tonight, that some of them have low volume in the options, then realize that, okay, we're probably trading each other. So you got to be careful and mindful of that. So especially if it's something that you think I'm already likely in position on, right? You know when that's the case. So be mindful of that. But it looks to be a great week, guys. Hope you guys had a good day today. If you didn't do anything today, you definitely learned a lot again. So again, something to take away. Of course, we don't care if it's green or red. We just want to learn something. We learned that what do? We buy on other people's mistakes, which is fear, and we ride it to the next point where maybe now it's time to sell to them, right? So wherever that next point is tomorrow, the end of the week, we'll take advantage of it when it's there, but we're not going to change course, and we don't do anything unless price tells us to. We don't do anything unless price tells us to. If that little voice in the back of your head tells you got to get out of the position, you tell it to shut up, or what you need to do is listen to it immediately, right? You just need to choose, are you trading against yourself or are you trading against the market? Do you need to beat yourself before you beat the market? Well, figure out how to beat yourself first and then try to beat the market. You guys know which order to do it in. I will see you tomorrow in the morning. Have a great night, evening, morning, wherever you are. And until next time, enjoy.